Hello everyone, welcome back to FX 20 Pips. Today is the 21st of July 2023. Time is now 10:49 a.m. GMT plus 8. You can see that I'm currently looking at BTC USD chart instead of the usual GBP USD. Now, why is that so? Because there is something that I want to share with you about margin levels. Okay, we are not looking at a chart for this video. This is just trying to explain to you margin levels. So why am I looking at BTC USD? Why do I want to talk about margin level? The reason is very simple, because I was researching and looking at what the Microstrategy is doing with regards to Bitcoin, and this is some of the news article that I got, and let me just change it over there. So this particular article, it is in June, okay, 2023. Now the main thing is, it says that Microstrategy has spent another 347 million in cash, all right, between this period this year. All right, it has currently holds over 152,000 bitcoins, and the value is so much, 4.6 billion at current prices. Then it start to make me wonder, right? When they trade Bitcoin, what they did is they actually buy Bitcoin and have it in their wallet. Okay, whether it's a cold wallet, hot wallet, but they actually bought the Bitcoin and held on to it and hold on to it. Now, so meaning in the sense that they are not trading the futures or like what we would normally do as a Forex traders, where we just trade over the counter. Okay, we don't actually hold on to the actual shares of Bitcoin or Forex, you know, which we won't be able to anyway. But the main thing is they keep buying over the years, and so my question is, do they ever has a stop loss, or do they just like keep buying the dip? So this brings me to another piece of paper, which is just here, and this one, just hang on, let me just adjust the screen properly. Okay, let me just expand it. All right, so this is the Bitcoin purchase history by Microstrategy. So depending on where you are, whether you are UK or US, this is the month. Okay, the first one is the month, and the middle one is the day. All right, it's different from the UK version. Now, since August 2020, they have started buying Bitcoin. As the month progresses, okay, they keep buying. Now, if you were to scroll down and look, there isn't a negative, except for this one, when they sell 704 bitcoins. So if you look at the whole purchases, it's very clearly that they are just holding, they're buying and holding for long. So is a stop loss applicable to them? Why would you have a stop loss if you have the actual product in your wallet? Okay, and especially when they buy in cash. Okay, unless they are using a bank loan or whatever, just to hold on to it. And that would then bring me to the actual topic for today, which is margin. Okay, if they're using a bank loan or bank purchases where they only fork out a smaller amount of cash, then that means that they don't worry about stop loss, and all they have to do is just worry about the margin. Okay, is that what they only have to worry about? Now, of course, like I said, if they are all purchases using the cash, cold hard cash of 4.5 billion, then obviously, you know, you are just only taking the paper loose as of now. Going back to the chart, as if you can see that the peak, okay, if you look at the date, yes, as I move the cursor around, okay, around here you can see the date. Now you can see that the peak of Bitcoin is in 12 April 2021. Okay, so April 2021 and November 2021. Alright, so let's go back to look at Microstrategy purchase history. So in April 2021, okay, so this is April. Okay, remember the first one is the month, So in April 2021, that's the peak. So you went up to, bought another 253, right? So price keep going. Another peak is in November 2021. This amount, okay, which they bought. Meaning to say that after these two peak in April and November 2021, anything below are losers, right? Losers. So all this amount, maybe you want to include this one or start from here. All this amount are losers from the peak, right? Because as price goes down, they are buying the dip, buying the dip, buying the dip, buying the dip, buying more dip. Okay, especially in the period of April 2023 and June 2023. So let's go back to the chart. So in April 2023, okay, April 2023 will be about here, and June 2023, okay, it will be about here, right? So they have also bought Bitcoin here, which I shown earlier on. Now, for us trading the Forex, you know that we will put a stop loss somewhere, right? If price go further down. But obviously, if you look at the purchases, apparently, because like what I say, if they're holding cash, so there's really, these are all paper losers. So at end of the day, like if they're not using stop loss, then are they depending on the available of margin level, meaning they have more cash to absorb the downtime, such that the bank, if they are borrowing from the bank. So this brings me back to our Forex currency. Okay, so let me just show you this. So this is a demo account, all right, with a balance of 50,000. Just remember again, this is a demo account. This is a US dollar. Okay, this is a US dollar account, $50,000. So I'm not sure whether when you trade currency, do you actually look at your margin level, okay, or you just simply look at, now if I were to buy here, my stop loss will be here, and this is all that you look at, stop loss. But let me just show you how to calculate the margin level. So in the standard lot size, okay, we have 100,000. Okay, standard lot size is 100,000. Now we are at GBP USD. So meaning that Okay, now, and also this account, this demo account is using a leverage of 500. Okay, so leverage to some of you is like, oh, why are you using so high a leverage? You know, I'm only using leverage of 25. Okay, you must be gambling by using leverage of 500. Now, I'm not sure whether you have done your own calculations and actually knows what this is and how, like, even using 500, if you know what you are doing, this is not gambling at all. So let me just carry on and move on. Okay, now for one lot, you can see that my buy margin is $257.48. Okay, and this is based on leverage of 500. Now, if I were to change it to 2 lot, you can see it doubles up, okay, to 514.68. So for easy calculation, let's go back to one lot. All right, and then let's see how do we get this value, 257.8. Okay, so this I need the Excel file for you. All right, let's do this. Let's open this. Okay, now the thing that I need to show first will be how should I do this? Okay, first thing I need to type is leverage. Okay, leverage is 500. This is the currency pair of GBP USD. Size, okay, it's one lot size, right? And I have the capital of 50,000, right? Okay, so leverage is 500. Yep. Now, let's say if I buy one lot size, what does it mean? Okay, it means that this value here, okay, resume this value here, 1.288. Where's the mouse? Okay, 1.28830 times 100,000. That means at the leverage of 1, all right, at the leverage of time 1, I need to have a capital of $128,830 just to buy a single lot size of GBP USD. Now, who has all this money sitting around just to buy one lot size? And that is where all the trading platform, they give you time 25, time 20, okay, even some demo you can go to time 100 or even time 500. All right, so for this demo account, which is leverage of 500, it means that the margin required, because we don't use this cash amount and put it into the trading account. That means the trading platform, okay, they let me $257.8 so that I can cover up with this amount. Okay, meaning that one lot size is this, I divide by the leverage of 500 equal 257.66, okay, which is close enough here. You see that, right? So meaning as I trade on this demo account, my margin is 257.66 that is required. Okay, so here I put margin required is 257.48. Okay, based on what I'm looking at here now. Right. So this bring my equity. Okay, this bring my equity down to, because the equity is my capital minus the margin required. Okay, and minus some commissions, which is after the trade is completed. But at this stage, for simplified reason, okay, your equity is your capital. You have to minus away the margin, right? Because you're using 500 leverage. So equity will be equal to 500 minus margin required. So this is your equity after taking one lot size based on 500 leverage. Okay, imagine immediately you click on the mouse button, your equity drop. Right. Then we will have our margin level, where margin level is the amount of equity over this. Right, so it will be equity divide by this. Okay, I just need to change this and give it a lot of decimal points. Is it scientific? No, let's put it as numbers. So, yep, so this is the margin level, and margin level you need to multiply by 100. Alright, multiply by 100, then you will get I call it 193189%. Right, okay, let's just do a demo and I'll show it to you. Okay, so I'm going to look here. I'm just going to place my order on the demo account using one lot, and this is the margin. All right, okay, so let's try this. Okay, and then also you look at my margin level, the free margin and margin use. Okay, and my equity. Right, let's do this. This is a demo account, right? One lot place. There we go. So what you can see that this is the margin level, this is the margin level. Okay, it goes up or down depending on our equity, and our equity is affected by the current profit, okay, or losses here. Right, so it just changes a bit, but you can see that 193189, 1931, well, close enough, isn't it? So my point is that by having a 50,000 capital with leverage of 500, buying one lot, okay, I have a margin level of this amount. So if the price keep going down and it goes to, let's say, 100%, let's say the stop loss is 100%, okay, meaning if my capital, okay, or rather the equity, meaning if my equity keep going down until it is the same as the margin used, which is 257.68, okay, this will become 100%, okay, down from 19,398%. That means the bank is going to stop out my trades because my equity dropped so much. Okay, now in order to drop back here, that means I have to actually lose 49,984.26 minus 257.68. That means I have to lose, okay, if the world stops now, all right, and this doesn't change anymore, I have to lose 49,726 for this to be 100%, and that's when the auto stop out by the platform kicks in. Okay, then you will see that, wow man, you are crazy. Okay, if you have a capital of 50,000 by buying one lot, you manage to lose 49,000, you are a lousy trader, right? Okay, so let's look at things in a context. So one lot here, okay, per pip value, if okay, I'm just going to highlight here. Okay, when I mouse over, you need to look at here. Oh, it's already there anyway. So one lot size per pip value is $10. Okay, per pip value, meaning where is the per pip value? This, okay, the fourth digit here. All right, this is 1 pip. Okay, when it goes to 28, this will be increased by 1 pip. All right, so this is a 10 pip, this is the single pip, this is the 10 pip, this is the 100 pip, and the digit 2 is the 1000 pip. All right, so the fourth digit is the 1 pip. So every time this 4 digit changes once, it will increase or decrease my equity by $10 because I'm using one lot. Saying that, so if I have this equity to drop, okay, so how many pips am I dropping? Am I allowed to drop? Okay, so here I will have a pip drops. So the pip drop here will be equal to, because I want to get it to 100%, so it will be equal to this one minus the margin required. Okay, the remaining I divide by 10 because $10 is a pip. All right, so this is not dollars. Yep, about here. Meaning that if I were to walk away, and if GBP going to drop 4,948.5 pips for my equity to be equal to 257.48, that's when my margin level dropped from 19,000 to 100%. Now, how much is 4,000 pips drop in GBP USD? So price now is 1.28814, right? This is the 1 pip, this is the 10 pip, 100 pip, this is the 1000 pip. So for me to drop 4,900, okay, let's make it easy, right? For me to drop 4,900 pips, that means the price will be, let's do it calculator. Okay, here we go. So we have 1.28814. For price to drop 4,000 pip, means I have to minus 0.49485. It will be 0.793. Meaning GBP got to go to 0.79329 for my 50,000 to be left with 257.68 cents for my margin level to be 100%. Okay, and then for my platform to start the stop out. Okay, when I set this to 100%. Right. So if people are not using stop loss, are they then using the margin level? Right. So if you have so much margin level that your account can absorb, do you want to use a stop loss? You get what I mean? Because in currently, what most men, or rather all traders, are telling is, don't forget to put a stop loss, right? Meaning that if when you buy GBP USD at 1.28818, 1.288, what is it now? It is 0.5, okay, 0.5. So then we say, okay, you look at the chart, you find the structure, and then resume. Or you look at the 1% of your account, and let's say you want a stop loss of 30 pips, meaning a price of 1.28505, okay, because this is 30 pips away, right? You have to stop loss, okay? That means you take a loss. All right, when you take the loss, it means that your equity drop from 50,000, because it's 30 pips and 1 pip is $10, it will drop $300 and you're left with 49,700. All right, and if everything is the same and you're buying at the same price, okay, so your margin level will drop. Okay, margin level will drop. And let's say you are lousy traders, or don't say you're lousy, or you keep a very tight stop loss, okay, 10 pips, 20 pips, you keep losing, all right, and your equity goes down 5,000, okay, which is 10%, okay, 5,000. You can see that your margin level keep dropping, all right. Okay, so if then sometimes you win a little bit, you let's say you went up to 60,000, okay, your margin level increases. All right, remember you need to time 100 for this one, okay, time 100 to get this value. All right, because this I fix it, what I'm going to do is maybe I will just change it for you. This one, put this, okay, one is this time 100, and then I'm going to put it in percentage. Yep, okay, so time 100, okay, your margin level will be 23,202%. okay, remember this is in percentage form. Okay, so as you go along, and I want you to look at the changes in here, okay, and the equity, right? So if market goes against you from 60,000 and it dropped to, let's say, 30,000, you can see that, okay, because you keep taking a stop loss, right? You take a stop loss 1%, and the luck just wasn't on your side, okay? So from account size of 50,000, you drop to 30,000, and you see that when you are at 30,000, you try to buy a single lot size again, your margin level drop to 11,551, and you are only allowed a pip drop of 2,900, okay, for it to reach 100% here, right? Okay, so what I'm trying to say is, if MicroStrategy they are not using stop loss, okay, assumption is they are borrowing from bank, and assumption is if they are not using stop loss, then they are basically depending on the margin level. So how would this help you as a currency trader? Okay, I'm not saying not to use stop loss, but I'm just trying to tell you that, okay, how you look at the margin level, how it's affecting you. All right, and this is because of the leverage of 500. Now I give it let's put it to a leverage of 20. Okay, if you put a leverage of 20, all right, so you can see that the margin required would be this would be, okay, let's change this to 50,000. All right. So the capital required this is capital. The required fund. Okay, required fund would be equal to current price of, let's take the current price of this 1.2805. Okay, let's do this first. 1.2805. This is the hair price. Yep, by the way, okay, required fund will be equal to this times 100,000 divided by 20. Divided by this. All right. Okay, required fund. That means this is here. Okay, let's change it to 500. Right. Okay, so the mathematical formula is correct. Let's just refresh again. Leverage of 500, one lot size. Average of 500, one lot size. Margin is 257.48. Okay, 257.61, and of course you have to look at changes in the amount, whether is it this one or this one. All right, so I have it fixed here. So the idea is that it is close to this value, meaning that if your leverage, I drop it to 20, you would require more margin. All right, that means your equity would drop, which affect your margin level. So let's look at this. If you have a trading platform that gives you 20 leverage, right, you can immediately see that your required fund to buy one lot size, okay, is 6,440 instead of 257. This will bring your equity down. All right, from 50,000, you have to minus the required, and this is your equity. Now, because your equity is down, and then you have only a margin level of 676%. Okay, so you are only about you can only drop to 100% before the platform stopped you out. Okay, all right. So with a leverage of 500, I can drop 4,948. With a leverage of 20, I can only drop 3,711.95 of drops. Okay, so the higher the margin required, it's going to eat into your equity, right? And this is only one lot. Okay, if you buy two lots, tab 2, this. All right, so as you can see, you require more margin, lesser equity will be the outcome, and you are only 188% away from the 100% stop out level, and you're only allowed 2,423 pips drop from this value. All right, so the other point I want to make is having a leverage of higher, like whether it's 10 or 20, doesn't mean that you are a gambler or you are risking more. No. Okay, you are simply borrowing lesser money required. No, sorry, you are borrowing more money with a smaller amount of margin required, so that you have more equity to avoid the 100% stop out. Okay, of course some of you say, oh, now if my leverage is 500, that means I can trade more, and that is the issue where you are going to have now. Okay, because when you keep losing, and then instead of two lots, okay, now you are, let's say you buy 10 lots. All right, so your margin level is now increased 10 times to 2,576. Okay, let's compare to a margin level of only 20. You can see that you are not allowed to buy because it drops below your equity. Okay, so with a leverage of 20, how many lot size can you buy? Let's try 5. Okay, so 5. All right, if you buy 5 lots, your equity will be here. Okay, but your margin required was 32,000, right? And then your stop up level is already below it. Isn't it terrible? Right, and that is why people, when they say that, well, in order to trade more, I need to increase my capital, let's say to 400,000, right? If 400,000, average of 20, all right, by buying 5 lots, you still have 1,142. So if your leverage is only 20, then the only way to buy more lot is to increase your capital. All right, but for others, if they have 500 leverage, okay, with a 400,000 capitals, they allowed to drop. Their margin is 30,957. It takes forever for them to. Oh no! Let's see if I can recover it. Oh well, I think it doesn't want me to carry on, but I hope that I have explained a bit more on about margin level, and it brings me back to here. All right, that if they are not using cash and they are borrowing from bank, meaning that they are not using stop loss. All right, as you can see, it's all adding. There's only 1. All right, so that's mean they are depending on, if they're using loan, that's mean they are depending on their margin level, and all they need to do is just make sure the margin level, whatever the stop up percentage, whether it's 100%, okay, that their margin level keep above 100%, okay, by increasing the capitals or borrowing more money, okay, whatever it is. So how do you use this knowledge to trade in FX? Okay, whether you want to put a stop loss or you want to base on your margin level, okay, that's really up to you. I'm not advocating anything. I'm not saying that you should use stop loss or you should use margin. It's really up to your individual preference and knowledge. All right, and yep, unfortunately I have to stop this suddenly. As you can see, the document just gone kaput, and it is what it is. All right, hope you learned something from here about margin, how to calculate your margin, and how not to buy too many lot size because of your margin level. All right, and all right, see you again. Goodbye.